What's going on, everybody? So hey, it's Tuesday. We normally do these midweek updates on Wednesdays, but because it's a short week, today's pretty much middle of the week, so I thought I would do it a day early. So we're going to look at a couple more earnings we have coming this week. We'll look at some more of the macro that's coming. There's actually a lot of, all the important macro is yet to come this week, believe it or not. We'll look at sort of the rally that's fizzled out and why, and it's probably mostly to do with crude oil. We'll look at a whole bunch of charts. We'll look at some of the setups from last time, and I was kind of looking for new setups, and I'm just not feeling it in this market. I think that we're just going to be choppy, messy, unless some of this macro that's coming, can really change the situation. But right now, this market just doesn't seem to know what it wants to do. So therefore, we're not going to take any setups until the market, shows a bit of a direction here. All right, so let's get right into this here. Go ahead, smash that like button. It really helps us out. I am Kevin D. I'm a full-time trader, and I'm hoping that I can make sense of all this for you. Let's move on to this guy here. All right. So everything we do here is to, help out our members really in the Discord. We do these videos every week to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders and investors, and members get to take part in live streams, live mentoring sessions, and lots of discussion throughout the day, of course. So check out the link below and come join us in Discord. We really love to have you. All right, here's a quick disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, let's look at some earnings. What do we got? So tomorrow morning, ConAgra. I doubt that it interests too many people, but maybe you've got a piece of this. After the close is really nothing. Before the open on Thursday, Constellation Brands might be interesting. This does have a bit of a following. On Thursday after the close, Levi's, who doesn't have a pair of Levi's in their closet, right? So that might be interesting. And then there's it's a holiday on Friday, so there's nothing, obviously. So that's it for earnings the rest of the week. Our macro for the rest of the week. So we had sorry about the sirens there, if you can hear that. On Wednesday we have ISM Services PMI. Now on Monday we had the ISM Manufacturing PMI. The Services PMI is much more important. And this is where inflation appears to be kind of sticky, at least according to the Fed. So they'll be watching this number really closely. Now, it was interesting today when the JOLTS job openings came in soft, quite a bit. The job openings quite a bit lower than expectations, and there was also factory orders that came in a little lower than expectations. And we kind of went down all day on that because I think what's happened now is everybody is thinking, okay, well, inflation is beat. Killed that one off, and now when these numbers come in soft, instead of rallying like we would have done, up until a couple of weeks ago, we would have rallied hard on this jobs number that came out this morning. Instead of that, people look at that and go, oh, geez, the economy's really going for a dump here. We're going to go into a recession. So now people are getting scared of recession. So we're back into the place where bad news is bad news. We've been in a place where bad news is good news. So we've got to shift our mindset on this. And when we see numbers that we used to think were good because they were disinflationary, well, now they may not be so good anymore because they hint at a recession coming. So, ISM Services. This one I think may be an exception to what I just said, though, because this is the place where we think inflation is sticky. So we'd like to see this come down a little bit, but not too much. If this comes down a lot too, then that recession fear is really going to ramp up. But if it comes down just a little bit, everybody go, okay, cool, yeah, inflation's under control, and now we're getting inflation in the services PMI under control, and yes, the Fed doesn't need to the Fed doesn't need to raise rates anymore. They can start cutting rates. Everything's all good. So that's what we need tomorrow is the Goldilocks number out of that one. On Thursday, we have unemployment claims, as we always do on Thursdays. And Friday, the markets are closed for Good Friday. However, non-farm payrolls, really important jobs numbers, come out on Friday. It boggles the mind why they're doing this on a holiday. So this, the futures markets are open. Electronic trading, the futures markets will be open on on Friday. So if you really want to play the number, you could play it there. But it'd also be good to maybe take a look, take a quick look at some point during the day and see what happened there when these non-farm payrolls came out, because that can give us some hints as to what might happen on Monday when the markets open, when the equity markets open. So yeah, odd to see these things come out on a holiday. All right, let's move on from there and start taking a look at our markets. We're going to look at the major indices, international markets, commodities. We'll be taking a close look at oil again for obvious reasons. We'll look at our major sectors and some of the setups that we've been playing. Whoops, that's not supposed to be there yet. All right, let's move into our SPY. So this is the S&P 500 ETF, and you can see that we had a really good week. We had, how many up days here? We got 1, 2, 3, 4. Yeah, 4, 5. And then today, first down day in a little bit. Today is, let me zoom in here. As you can see, we had no problem breaking through this resistance level. And the momentum slowed yesterday, but we still managed a green day. We still managed to go up a little bit. But today, unfortunately, printed a bearish engulfing candle. One thing that I am happy about is that the wick on this engulfing candle came down to support level, and the 40, I've got like 406.75 here. It's 406.75 to about 407 and a quarter. But anyway, it came right down to that level, almost to the penny, and bounced there. So that's good to see. There was some strength, towards the end of the day as well. We quickly look at an intraday chart here. As you can see, that there was pretty strong buying into the close, and we never actually came down and touched that low of the day that we set earlier around lunchtime. Never quite got back down there. It made a number of tries, but we got back up. And the close, and then just after the close, got up and almost tagged VWAP, and are now just consolidating under VWAP. I think this is actually fairly bullish because this market has for 2 days now really had every reason to go full on bear, and it didn't. If you remember yesterday, when we had in the SPY anyway, had a fairly strong rally. And this pretty much fell off a cliff. And if we look at something like IWM from yesterday, if this will come up for me, there we go. And look how steep this decline in here was. And IWM at this point of the day was actually leading the indices, and then it just completely fell off a cliff. But pulled itself up off the mat and managed to grind higher the rest of the day. Now today, a bit of a different story. It just, it had the fall off a cliff, went sideways. But again, it's, positive price action that, we put in a bit of a double bottom here. We came back down, we tested those levels and just kept rejecting those levels in here. And then, finished with a nice 15-minute rally into the close. So, while this may look bearish on the daily charts, when you look in here, it's actually not that bad. Okay, so let's go back to the dailies. We'll just finish off IWM here, and then we'll move to the Qs. Now, this is a big, nasty red candle here. We've gone up from the top of one level right down to the, down to the next level down, right? We've gone from a resistance level right down to a support level. We did find support here, so that's good to see. But you can see that, we still have relative weakness. Down at the bottom pane of this chart here is our strength relative to the SPY, relative to the market, and you can see that we're still showing a lot of relative weakness in IWM, the Russell 2000 small caps. And remember, that's where a lot of regional banks are. And a lot of oil stocks too. There's a lot of small oil companies in the Russell 2000. I think between small banks and small oil companies makes up 35% or something of that index. And neither of those two specific industries did very well today. All right, let's look at the Qs. Indecisive, almost a bearish engulfing candle, but not quite. That's good to see. Hanging out above resistance, though, or on support, right? This former resistance, now support. Couldn't quite close the gap today. But, I'm okay with this. This is, a little indecisive. That's fine. It didn't roll right over like IWM did, right? So, we've seen relative strength here out of the Qs today. And it seems that when the market, lately anyway, when the market seems to be getting into trouble a little bit, getting a little nervous, the Qs are holding up nicely. So that's interesting and really good to see. It gives us somewhere to go and a place to play in, right? All right, let's move on to our volatility index. Interesting action here today. So, earlier in the day, volatility, spiked way up. It got up right up to 20, got up to resistance there, and then pulled back, through the rest of the day. And, closed in the bottom quarter or third of that daily candle. So that's good to see. Also, I'm happy that VIX hasn't come all the way down to this 18 level. I mentioned on the weekend that every time it seems to get to that 18 level, we see these massive spikes in volatility as the market rolls over. So I'm okay with this consolidating in this area, somewhere between 18 and where are we at now? Between 19 and 20, or 1850 and 20, somewhere in there. The 10-year yield. So this should be bullish price action for equities, right? Yields coming down and coming down sharply. So why aren't equities doing the inverse of this? And I think that these yields are coming down because we saw data today that supports the argument that inflation is done maybe overdone, that we could move right into a recession. And I think that's what we're starting to see here, and I think this is one of the things that's kind of spooking the market a little bit. What else? Oh, there's one thing I forgot to show you on the SPY, and I guess probably on all of these indices. A lot of this price action we've got lately, really from when it sort of bottomed here. We had the one day with decent volume, but since then, we've had really low volume except for Monday. We had decent volume on Monday, but in between here you can see this volume's pretty low. It's well below average. So it's hard to trust any of the signals that this market is sending us right now, because when we rally on low volume, it's like, well, the bulls aren't that strong. Is it just that nobody's really selling? Are we rallying because it's short covering? Is that where the volume's coming from? Because people have to cover, they have to buy these stocks. And conversely, the same thing. When the market goes down and it goes down on low volume, well, then the sellers aren't convinced. It's just that there's really no buyers there. The buyers aren't really stepping up either. So, it's hard to really read a lot into these days that have low volume. Because it's showing that there's no conviction on either side here. And that's why I think we continue to see, at least for the rest of this week, sort of markets that are unconvinced, unless some of this data, for instance, like the services PMI, comes in a convincing fashion. All right, looking at our global markets. This is all world less the U.S., and this is grinding higher, continue to grind higher. This is a lot of strength in this one. EFA, this is Europe, developed Far East, and Australia. Look at that, almost in an was this all-time high? No, this is not all-time high in this, but this is the, coming on to a very near a one-year high. Yes, very, very near a one-year high in this ETF. Pretty impressive, I'd say. Now, we got an indecisive candle today, right as we're coming into these resistance areas. So be interesting to see how this deals with it. Emerging markets, less China. You can see we've come right into a resistance level here, but I mean, strong move, really nice move. A little bit indecisive today, but not weak like we've seen in U.S. markets. Right into resistance though, so does this roll over or go higher? And finally, FXI, speaking of rolling over, this has rolled over. Now, this is, this one actually is a really interesting lesson in gaps. So you can see right here, back here, we had this gap. And then we came down, we came back up, and we came up to the gap, and you can see how the bottom of the gap pretty much acted as resistance. We went into it a tiny little bit, but not much. It acted as resistance. We tried 3 times to get in there, and then this rolled over. Came back down, found support right where it should, right? Moves back up. We had one day acting as resistance there. It comes up, it breaks through, it closes the gap, just peaks a tiny bit out the top of the gap and then rolls over again. So you can see how the bottom of the gap and the top of the gap both act as resistance independently. It's quite fascinating. You see this kind of thing all the time with gaps. And the same goes for gaps, gaps on the downside, acting as support, right? This ETF now, we found some resistance up there at the top of the gap. We would expect that. And now it's finding support, at least it did today, at this support level and right at the 100-day moving average and the 200-day moving average. This thing is so technically well behaved, you've got to expect that this is going to bounce up now, and then on the next time through here, we'll actually break through the top of this. So maybe we've got some good things coming out of China. And maybe some of the money that's rotating out of these sectors in the U.S. will actually rotate into some of these Chinese stocks and drive this higher. All right, let's move on to gold. Okay, so this candle here is telling me that I've been getting gold wrong. I've been kind of bearish on gold. I expected to see us break out the bottom of this flag, even though this is a bull flag. I thought, what is the reason for gold to go up? The banking crisis seems to be abating. Inflation seems to be under control. And now, I guess, are they buying gold because they fear a recession? That does play into the gold narrative a little bit. A flight to safety and all of that. Surprisingly large move in gold today. Now, there's some resistance coming fairly close by overhead. We've got this pivot here, and then we've got the all-time high at 2089. Is not too far up there. But, looking at this price action on gold today, I think we can expect to see, another couple updates here is sort of what it's telling us. When we look at the gold miners, these things have just had, look at this monster run here. Look how steep this uptrend is. Now, we've come right into the top of this gap that goes way back to here and stopped right there. So is this acting as resistance? Is this now going to roll over? Looking at this strength here, you kind of have to say probably not. Look at the volume too, right? In the last couple of days, we've had really good volume in there. We could be approaching a bit of a blow off top in these things, though. So, if you're in this space, be careful. This will give some of this back at some point. Because this is just too steep. It can't keep going up like this forever. But there may be a couple of more days. And maybe this tops out here at 36 at this major resistance level. And you can see that resistance level goes way back in time, back into 2020. I can see GDX topping out there as gold topped out at its all-time high. And that would be an interesting, that would be a place we'd expect to see that roll over. And if you look down at the bottom here, you can see that these are outperforming relative to the market as well. No surprise. Silver had a monster move today, almost 5%. I am fairly happy to see that. I'm although surprised, of course. Now I've got some leaps in silver, and when we came up here on Monday and started kind of waffling around, I see that we're coming into resistance here. I actually sold some shorter dated calls, turning my leaves basically into a call spread. Or kind of like cover calls in a way you might call it. Now I sold I did that on silver. Actually, I should show you the silver chart if I'm going to explain this trade. Yeah, so when we came up here and you know, momentum slowed right into this, you know, you can see the resistance area is pretty much the same in SLV, the silver ETF. I sold calls against my position. I sold the $24 calls, so that's still way up here, and they've got what, a week and a half left. They expire a week from Friday, so I'm not too concerned yet. And this should be, this 24 level on SLV should be major resistance, and that's why I sold. That's why I sold calls at that level. So I'm not concerned. And the upside is, you know, my leaps are, they're at 23. So they are increasing in value rapidly. Well, these $24 calls are only slightly, the ones I sold that I'm short, they're only slightly increasing in value. So still doing all right there. Anyway, back to looking at the futures. It was a really good move in these things today. And like I said, coming into 2650 here, we expect to see resistance. But again, there's another one where I would expect to see some more upside over the next couple of days. Copper, on the other hand, and this is saying, hey, this is part of the recession narrative. You can see that copper was quite weak today. This pulled back a lot because copper is an industrial metal. And if we're going into recession, then we don't need as many industrial metals. Now you can see on the pullback here, it came right down into this trend line and that horizontal support level and the 100-day moving average and found support there exactly as it should do. Okay, let's move on to oil. Man, there's just been so much going on. I was hoping to be able to do a quick video today, but I apologize. This is we gotta cover a lot of this stuff. Okay, oil. Now, right after I did the weekend video, the Saudis and OPEC come out and talk about big production cut, 1.1 something million barrels a day they cut in production. And of course, oil jumped up, and that threw a wrench into a lot of the setups that we were talking about, a lot of the prediction for what the market might do this week, because that increased inflation fear. Obviously, if oil is going higher, that is going to cause inflation at the pump, something that everybody's going to see right away. And the psychology of that is quite bad. And it will, you know, higher oil prices do work their way through the economy into higher prices, you know, in all areas of the economy. So that brought in inflation fears, which is why we didn't kind of rally as much as I thought we were going to when I recorded that weekend video. Also in the weekend video, I said, hey, look, we're coming into the apex of this pennant here. And that should act as, you know, fairly strong resistance. We also had, you know, and I expected to see that roll over. Well, obviously, you know, the Saudis cutting production, or OPEC cutting production, changes everything, and we had this massive gap up. And you can see it. We went from one level right all the way up to the next, with nothing in between there. So we're now a little indecisive in here, and because we are at major resistance. This is a major level in here. We've been talking about this again and again. How many times have we come in and interacted with its level? So I don't expect this to go any further, and I kind of think actually this is going to roll over. I'm still not super bullish on oil. I think that you know, we're up here. I think we go sideways for a little bit, and then we roll over. And if we look at some of the ETFs in this space, XLRE, for instance, you can see this has already started to roll over. It had the massive gap up, and we've already pulled down today, closed half this gap already. It did bounce off the lows today, but you can see that at least the stocks in the energy space are not doing great. And we don't see, you know, an outstanding amount of outperformance to the SPY either. Look at, you know, we had a strong move up here, barely outperforming SPY. So I think that, actually I want to look at RSI on this and see how that looks. No divergence there, okay. So that's XLE, that's our general energy ETF. We'll look at XOP, which is the oil producers. Look at, I mean, we have this channel, you know, I've had this channel marked in here forever, right? It comes right up to the top of that channel yesterday. It opens right on it again today and just sells off all day. Did find a little support here, that formal level, But the top of this channel is definitely acting as resistance here. And so this says we should expect to see, some down from here. Go back and test the bottom of the channel again. OIH, Oil Services ETF. Again, very weak today. Big gap up. I didn't actually draw that in. Probably should make this clearer. So we have big gap up. That's where we gapped to yesterday. And you can see we almost entirely closed this gap. There we go. Almost entirely closed the gap today. Had a little bit of bounce, later in the day though. Again, does this look healthy to you? No, this does not say that oil is going higher. All right, let's move on to, let's skip 10. There's nothing interesting there. All right, let's go into our sectors. Consumer discretionary. As you can see, we came up to a resistance level, have been unable to get through it the last couple of days, looking indecisive, but not looking bad either. I mean, it's allowed to take a break. It had a nice run. Take a break for a few days, rest up, hopefully go higher. You can see we're right above that 200-day moving average, so that's nice to see. XLI, industrials, these were weak today. Second weakest sector. Not sure why, but big red bar. So a lot of weakness there, and you're really looking like this wants to put in a lower high here. Of course, a lower high isn't confirmed until we make a lower low below here, but it certainly looks like this. And so we can say, hey, maybe this is the beginning of a downtrend on this. Maybe we're seeing this start to play out here. XLF financials. So these have been unable to break out of this wide consolidation. They're kind of stuck in this box here and had a red day. These were fairly weak, but the real weakness here was in KRE, these regional banks. And you can see that these continue down, but did find some support here at a level that we found support a couple of times before. But still, this is not good action. You can see, well underperforming the S&P 500. And look at a little extra volume today. Unlike a lot of sectors, this one did have larger than average volume. So does this, is the market telling us that there's another shoe to drop in this regional banking crisis? It's kind of saying so here, I think. So this is an area we want to watch out for. If there is a problem in here, obviously it's going to spread to the overall market. XLV, healthcare. This was early today one of the strongest sectors, but as you can see, this pulled back and put in this indecisive doji here. So that's not ideal after a strong up move. I think the best case scenario right now for this is just go sideways for a couple of days, and then build a base to move higher from there rather than completely roll over. XBI Biotech, red day here. You can see this come back down, test the bottom of the channel, test that pivot level at 75. Did find some support there, so that's good to see. XLRE REITs, not much to see here. XLP Staples, continuing to grind higher, a little bit of an indecisive candle today. XLU Utilities, this was the strongest sector today. And you can see we're building a little bit of a bull flag there. XLK Technology, this about equal performance to SPY, I think. But not terrible, right? This is starting to draw a little bit of a bull flag. It's very close to a bullish engulfing candle, though, unfortunately. Or sorry, a bearish engulfing candle. So, what side of the fence you want to be on in this? If you're in the bull flag camp, then you're looking for a little more consolidation. If you think that's a bearish engulfing candle, you're expecting to see a big red candle tomorrow. I think it's all just kind of showing a little bit of indecision that we've been talking about and seeing in this market right now. XLC communications. This was the second strongest sector today, and then, this managed to go higher. Considering what we saw in the market today, this is fine. It's a little bit kind of almost a doji, but I'll take it. Nothing wrong there. SMH, semiconductors. A little bit of a red day, down day, kind of a bull flag. Although it's expanding, and you generally don't like to see that. Meta, this continues to grind higher. This says, no, I'm just going higher. I don't care about anything else. Whatever's going on in the market doesn't matter to me. Apple, kind of the same thing, really. Ignoring everything that's going on in the market and grinding higher. Although actually this did pull back today. Was this red today? Okay, yeah, this is actually slightly red. But this is not bad. This is just a rest day. Amazon, this one was up today. This actually had not a bad move. Broke out the top of this little 3-day consolidation. Although this is still really tight range action. Look at our ATR on Amazon is just over 3%. All it managed to do today on a breakout day is 1.5%. So very tight ranges in here. This could say, from contraction comes expansion. So maybe we are going to see a much stronger move out of this over the next coming days. Let's move over to Netflix. Bit of a red day for Netflix, right under resistance, not surprising. Google, not much going on here, resistance. Now this could get a little scary. Okay, you can see we've got a high here and we've got a lower high here. Are we putting in another lower high? And if we put in a third, we start to roll over here. I think that everybody's going to go, okay, well, this is not, this is a couple of lower highs here. This thing is rolling over. And I think they will exit quickly, like they did here. And then we'll put in a lower low. So Google really needs to step up here. Buyers need to step up in this and push this higher and not let this roll over. It's in a little bit of danger right here. Microsoft. This one, indecisive candles, right into resistance. Not surprising. This should be fairly strong resistance in here. I think for a little bit. I think that what needs to happen, we need to consolidate sideways underneath this level for a little bit and then break through it. Tesla. I was watching Tesla closely earlier in the day, and I really think that Tesla was leading the market lower today. If we look at the intraday on this, you can see, look at these two nasty red candles here. Some buyers came in and they got punished, because it wasn't long before, again, another couple of nasty red candles, and then it just, continued lower. But notice how, if you remember back to the SPY chart, this is very, very similar kind of look of the major indices today. And I think that is because it was the weakness in Tesla just kind of spread to the rest of the market. Okay, let's move on to some of the plays that we watch. This is HIMS. Now, yesterday HIMS really liked this action yesterday on HIMS. Didn't like the little wick that it left behind there, but it seemed to be breaking out of this range. It's been consolidating here for a while now, and seems to, in my opinion, due for a breakout. And we got a bit of that yesterday. This is a pretty decent candle in here. But today, unfortunately, it gave some of that back. Now, it did close well off its highs. It bounced and regained some of those earlier losses. But it's sort of telling us we need to go sideways some more. This needs more time to consolidate. It's not ready to break out yet. Now, I don't think this is ready to roll over either. I don't think this is going down. But if it does start to roll over, it could get a little scary kind of quickly, because same thing I mentioned about Google, right? It's not as bad as Google, because it's really only it would be one lower high, because this did make a higher high than here, right? So it's still all positive price action here. It's just that if we roll over this 829, 830 area right here, that pivot low, it's really kind of got to be your line in the sand in this. I think if we move below that, then it's going quite lower. And I don't even really think you even want to hold it all that long if you're in this thing. I guess it depends what you're in it for, whether it's an investment or just a long-term swing trade. DOCN, DigitalOcean, we've been looking at for a little bit, because we were expecting a breakout out of this. We got that breakout last Friday. Had really nice follow through on Monday. Or wait, sorry, Thursday was the breakout. See, I'm thinking thinking the big green candle is Monday, because I'm used to doing this on Wednesday. So we had Thursday the breakout, really nice follow through on Friday, and now a couple of inside candles. Well, what are those inside candles drawing in here? Nice little pennant, right? This is a sweet looking bull flag that's setting up here. So this is, if you played that initial breakout and you're still in it, you probably might want to think about, and this is not investment advice, but you might want to think about adding to that position on a breakout of this flag, because this should go a little higher. Should get through this 42 level actually on a breakout of this flag. Certainly to 42, probably beyond, maybe even to 45 or so. So that's DOCN Workday. So this gave us a really nice breakout. It's setting up a little bit of a flag as well. So same thing goes there. If you like this stock, if you like that breakout, you gotta like a breakout out of here, out of that bull flag. Takes you where? 216-ish. So that's not bad. It's a half decent little move. All right, Duolingo. Another one that we were watching. Another one that had a nice breakout on Friday. But unfortunately a nasty day today. So if you're hopefully not still in this, right? See, on Friday, and I mentioned this I think in the weekend video, or in the Discord, because I played this on Friday, and I actually did a bit of an early entry on this if I remember correctly. But on Friday, when it went up and it started to pull back kind of hard, and because early in the day it was showing relative strength to the market, and then later in the day it was showing a lot of weakness compared to the market, and I did not like it, and I closed out half the position in the top quarter of this candle on Friday. And then we got indecisive yesterday, as we started to come down, and it looked like this just can't do it, right? When it got below on Monday, when it got below Friday's close, I closed out the rest of the position. And you can see we came all the way back down and tested the breakout area. Now it bounced from there, which is kind of what's supposed to happen, right? So I was probably a little premature in closing that position out. I probably should have waited a bit. But then given today's candle, I'm glad I did close it out. You can see we opened, gapped up a little bit, but then just sold off all day. And it had nothing in it. I don't think this even, we got a little bit of a bounce at the end of the day, but really I would just look at, just weak right out of the gate after that gap up. So, if you're in there, you've really got to see that breakout level. You've really got to see that hold. Now, if you like this stock, there's still plays in here. You could play the bounce off of this level here. Or you could wait and see if you get a breakout from this. But I think that for now, this is not showing the kind of strength we want to see on a breakout, so it's hands off, in my opinion. Last one. LFST is one that we highlighted in the weekend video. Now, a bunch of the ones that we highlighted in the weekend video had a lot to do with technology and the AI space. And those haven't done terribly well. there's a lot of volatility in that space right now. And one of the other ones we looked at was ARK. We should maybe actually look at that because I think that can still be in play. I did a separate video on the ARK ETF as well. Anyway, we'll look at this LFST first. So we got the breakout yesterday. I bought that down there right as it broke out. It was at the end of the day. I kind of like held my nose and did it. Kind of broke a rule to do it, but I just felt like, after seeing that intraday price action, I thought, yeah, this is going. And so I bought it and didn't like, after this gap up, and it pulled back right to my break-even price. Wasn't happy about that. But then it took off nicely. If we look at the intraday chart on this, so you can see it was rough in the morning, pulled back to the buy price, which was down in here, and then ground higher the rest of the day, which was really nice to see, and outperformed the market too. You can see down in the bottom pane on this daily chart we have performance relative to SPY, and you can see that it pretty much outperformed SPY all day. Got a little flat sort of in the afternoon here, but yeah, we're showing relative strength on this one, so glad to be in this. All right, and I mentioned ARK. We'll take a look at that one as well. Now this yesterday, and again, I mentioned at the beginning of the video that oil production cut really kind of messed up a lot of these plays, especially with technology, because when you have inflation fears, then you fear that rates are going to go higher, and that really hits technology. So a technology ETF is not going to do well in that situation. But it didn't do that badly either, did it? You can see that we did pull way back. It didn't break Friday's low though, and then bounced right back up again. Kind of put in a bit of a hammer here. And we put in another bit of a hammer again today. As same sort of price action. Opened, went lower, came back up, did finish lower. We were down in about 0.5%. Yeah, 0.5% today. But we're, still hanging around up near that breakout level. Now, I'd like to see it go a little higher. And maybe what we can get out of this, and this really all depends on these catalysts that we've got coming the rest of the week. But it'd be kind of cool if we did 2 days right up in that area, nice and tight, and then say Monday breakout then. And so maybe we get some positive catalyst over the weekend. Maybe those jobs numbers cause us to gap up or whatever and go. That's kind of what I'd like to see here now. But I think that, keep an eye on this, because this short interest, look at this, we've got 49 million shares short out of 200 million. So they could really start covering this, and if shorts start covering this, and I know it's a little bit different because it's an ETF, but if short starts covering this, well, they basically just print more shares in this. However, they do have to go into the market and buy all the stocks that are in this ETF. So that could make everything that's in this actually run up as well. All that being said, Tesla is the biggest holding in this. And we looked at Tesla earlier, that was weak. So we're going to need to see Tesla go higher as well if we're going to get a decent squeeze on this thing. All right, there you have it. That's all of our stocks. Let's take a look at what we've got coming up here. So, I forgot to mark the holiday. All right, so Friday is a holiday. We all know that, right? I will be doing a weekend video on Sunday. So watch for that, because I think we've got another couple interesting days coming. And then next week on Wednesday, we will be doing our live trader roundtable session. These are fun. It's just we get a bunch of people from the Discord together, and we all just talk about whatever, anything anybody wants to talk about. And those videos don't get posted publicly, so that everybody feels more comfortable talking. They're just available only for members of the Discord. And only members of the Discord are able to attend that live. So if that interests you, come join us in the Discord. Check out the link down below. And finally, I want to thank everybody for coming and making it this far. Hit that like button, share with your friends, and subscribe. I hope everybody enjoys the rest of the week and has an excellent Easter holiday.